Hey, what is up, everybody? Welcome back to another episode of Thirsty Thoughts on Investing. We are here today to talk about something that I get asked pretty much on a daily basis. Should I or shouldn't I buy gold? And if I should buy it, if I do buy it, if I do want it to be part of my portfolio, how can I go about doing that? Because there's actually more than one way, and certain ways have certain advantages and disadvantages over others. So let's go ahead and jump straight into the presentation, which is how to buy gold. Let me go ahead and get that up on the screen for everybody right now. There we are. How to buy gold, the ins and outs of how you can do it, where you should look, is it a good idea, a discussion on this webinar. So of course, every single time we say not financial advice, it's not what we're here for. We're just here to give helpful information on how you can begin to think about investing or improve the investing that you already do. So buying gold, the philosophy. Now, here's the thing. People who are very into purchasing gold are called gold bugs. They want that physical asset to be right there in front of them. They believe that gold has inherent value and it always will do no matter what happens to society. They are less keen on purchasing assets which are not physical. Cash, bonds, stocks, crypto. They believe only in the power of this metal because of its inherent value or its inherent perceived value ever since day one in human civilization. And that's the philosophy of buying gold. They believe that should there be Armageddon, a catastrophe on this earth, that cash currency, its value will revert to nothing because it's no longer backed up by a promise anymore, and it's no longer backed up by the fact that you can pay your taxes in it because governments cease to exist, and will revert to the most basic form of money, which is commodity money, and which is of course gold. So they always like to have gold as at least part of their portfolio, as a hedge, as something that's going to protect them should they need it, and should there be a complete catastrophe in society. Not just for that, but that's one of the reasons why. Some people see it as a good defensive asset to own, a good defensive asset to purchase, because what you'll find is commodities and stocks, they're slightly inversely correlated to each other, not totally inversely correlated. One goes up and the other goes down, but you'll find that they definitely move in opposite ways. So what that means is the price of commodities goes up, stocks tend to go down. The price of stocks go up, the price of commodities tends to go down. Obviously, it's not completely like that. I mean, you will find days where they both go up together. You know, correlation is exactly that. It's not foolproof and it's not an exact measurement. It's only ever that they have more of a coincidence. They're more likely to move in opposite ways than they are to move in the same way. That's what a correlation is. That's what a negative correlation is. And what you'll find is that if you want to go for out and out appreciation, then generally you'll be someone who wants to invest in stocks. Of course, there's a lot of caveats to that. It depends on your goals, your aspirations, whether you've got the stomach for the volatility. Gold, you will find, does not appreciate at the same rate. Stocks are said to appreciate, well, depending on what you buy, but on average, the market appreciates about 8 to 12% per annum. Depends on what measurement you use. Gold, the figures are not quite the same. They certainly don't appreciate at the same rate. And what you have to remember is that when you buy stocks, they also give you a degree of passive income because of the dividends yield from the stocks, whereas gold, that does not happen. So as far as I'm aware, the main philosophy as to why someone would buy gold would be not to make as much money as they possibly can. However, however, it would be so that they can hedge themselves against other occurrences in the world or in the markets. So there's four ways you can get exposure. First of all, I want to say just have a real think about whether you think that it's for you based on what I've just said. Now, the thing about it is where that falls down is when you get some people out there who want to grow their portfolio as quickly as they can, and they see gold as the means to do that. Actually, that's not really where it fits in. There are reasons for buying it, but typically that is not one. So I just want to shatter that illusion or remove it from your consciousness via watching this webinar. Here's the four ways you can get exposure should you decide that gold is for you. You are someone who wants to have that ultimate hedge against there being a collapse in civilization, or for whatever other reason. It doesn't have to be that. That's just the main one. That's the philosophy of the gold bugs. Here's the 4 ways you can do it. You can buy physical gold, direct ownership, physical gold, indirect ownership. What do I mean by that? I'll tell you in just a few moments. You can buy gold stocks, or you can get exposure via a spread betting account. So physical gold, direct ownership, that's when you purchase the gold. You purchase it typically from a website, and it will be delivered direct to your door in an armored car. You can then take that gold, put it under your mattress, bury it in your garden, do whatever it is you want to do to protect that stuff. But what it means is that you've got it in your hands right there in front of you, and that is your hedge against not only the collapse of society, but also against inflation, because that's the other point of gold as well, is that you're literally owning inflation. Whilst there's inflation, the theory is gold will appreciate that. It doesn't always work like that. You just have to look at the price charts of gold to understand that, because the price of gold doesn't always go up even when there is inflation, because inflation is really consistent over the years. However, that would be the theory, and that is how you can do it. So just decide to yourself, is this the means via which you wish to proceed? If you are the ultimate gold bug and you want to have that stuff right there in your hands so that you know that you have got that protection and you've got that hedge, then that would be how you would do it. And that's one of the ways that you can do it. Just remember that when you have gold, the physical commodity, it doesn't pay you any interest, in terms of it doesn't give you any passive income. There's no yield from it. It will appreciate, or at least that's the theory, but not like a stock and not like a bond where they pay you a yield every year on top of the appreciation of the actual asset itself. Certainly in stocks, not always in bonds. Physical gold, indirect ownership. This is another means. You can buy the gold, but you can have it stored in a country of your choice via whatever it is, whatever exchange that you use to purchase the gold. Now, that is a common way of doing it. You can even choose which country you want to put it in. So typically you'll have like Singapore, London, New York. Those are the ones that I've seen on the website that I use. Here's the thing, it's not actually in your hands. How do you know that that gold is present? First of all, hopefully there's some sort of independent body auditing that. You know, who's to say that somebody can't have a vault and say there's 50,000 kilograms of gold in it and then sell 60,000 kilograms of gold worth? You know, will that be checked? That is the concept of fractional money. That is something that has occurred through history. That right has been abused. Do you know that for sure? However, what it means is that you don't have to pay, or certainly you don't have to concern yourself with the fact that your gold's lying around your house. You know, you don't have to worry about someone taking it from you, insofar as they won't rob it from you. But bear in mind, you know, crazier things have happened in the country that the gold is situated in, changing the legislation so that they can repossess the country's gold. Now, that sounds absolutely bananas, but that's exactly what happened in America in 1931 when FDR decided that he was going to repossess that country's gold. So if you're a true gold bug, you'll have an issue with that because that goes against your philosophy. Next one, you can get exposure to commodities and gold stocks via your ISA. You can purchase individual companies that trade in gold, that mine gold or trade gold. You can purchase funds which are constructed of companies which have involvement in the gold industry, and you can use that as your means to get exposure to gold, because obviously the higher the price of gold, the more money those companies make, and therefore that drives their value, and that drives the value of the stock as well. Now, again, if you're a true gold bug, you won't agree with this because you don't actually have that physical gold in your hand. You're basically saying you're long gold, but you're not willing to go and actually purchase that gold yourself. You just want exposure via indirect means, and this would be how. Again, typically these will reflect the value of gold itself, and these actually don't have, well, they're not always comparable to the gains that you can achieve just by diversifying amongst the conventional stock market. Again, gold bugs don't like this because they don't get that gold in their hands, but it certainly is very convenient because what it means is that you don't actually have to have the gold or worry about it being in a vault somewhere. You've got the risk associated with the companies, but if you're diversified enough and you choose the right fund, what it can mean is that you're effectively diversified so well amongst the gold industry that the only thing you have to worry about is a total collapse of the gold industry if you're very clever. But then again, you get into an even deeper debate. Active fund, well, as far as I'm aware, there's only active funds that are in the gold, involved in the gold stock market. Or sorry, there's only really funds that are active which reflect the valuation of gold, in that there's an active fund manager. I haven't seen any passive ones. I'd be interested to see that, whether or not those exist. But of course, with active funds, you have slightly higher fees. You have to weigh that into your decision. Then the final way that I'm aware of is a spread betting account. Now, this of course is not for everybody, spread betting. There are accounts out there that you can set up and you can trade gold via betting on the movement of the underlying asset. That's what a spread betting account is. Betting is of course free in this company, in this country, I beg your pardon. So what that means is that you can get exposure to gold without paying any tax on it. You have to know what you're doing with one of these accounts. There's a few things that you have to weigh up and decide. It certainly require a little bit of expertise. I myself have never used one, but just be aware that it's out there. The huge advantage is that it's tax-free, and also you don't buy the underlying assets, so therefore I don't believe that you will pay any management fee from at least from the fund manager anyway. There are certain fees associated with the platforms that you buy it on, so I would be careful about that. Again, just a case of really knowing what you're doing if you're going to use one of these accounts. For me, it's far more complex to use this because it requires more knowledge than it is to use the other two methods. So, summary, please consider if it's the correct investment for you in terms of returns. People buy gold because they want to be rich, but actually there might be more effective means to appreciate your wealth. Certainly outside of the world of gold, it's not always the best thing for you. Decide whether it aligns with your philosophy. If you're someone who wants that ultimate hedge against society crumbling, there being a collapse, there being an issue, that's what the gold bugs believe, that even though they're not going to get as much returns in the short term or even in the long term, they're purely buying it to protect themselves and for that one day that may come or may never come in which they might need it. And choose the method if you prefer based on the advantages and the disadvantages and how they relate to you. And those are the 4 methods that you can use to buy gold. Thank you so much for attending Thursday Thoughts on Investing. More of the same next week. I shall see you all then.